Imagine an ordinary person, someone who works every day, pays bills, takes care of the family, and for a long time believed that getting rich was just about earning a higher salary. That is exactly how the story behind the mindset that Robert Kiyosaki always teaches begins. Instead of chasing only more money, he teaches how to make money work on its own. Income-generating real estate fits exactly at this point in the story. We are not talking about mansions or huge buildings right at the beginning. We are talking about something simple to understand, a property that puts money in your pocket every month. It can be a rented house, a small apartment, a commercial space, or even a property divided into smaller parts for rent. The secret is not the size of the property, but the cash flow it generates. Kiyosaki always reinforces that true wealth begins when money comes in, even when you are not working. While many people use their entire salary to pay expenses, those who invest in income properties begin to create a second source of income. First comes one rental, then another. Over time, this money helps pay for the property itself, covers expenses, and still leaves something left over. It is like planting a tree that month after month bears fruit. In the story of those who follow this strategy, the property stops being just a place to live and becomes an asset. An asset is something that puts money in your pocket. If rent comes in every month and expenses are under control, that property is working for you. Even while you sleep, travel, or spend time with your family, the rent keeps coming. Another important point that Kiyosaki teaches is that real estate protects against inflation. When the cost of living rises, rents tend to rise as well. While money sitting still loses value over time, a well-chosen property tends to keep up with or even surpass that loss. That is why he calls real estate a solid foundation for those who want to build wealth consistently. This strategy is not about getting rich overnight. It is about building something step by step with patience and a long-term vision. First comes understanding, then the right choice, and over time, the peace of mind of knowing that there is income coming in without relying only on your daily effort. This is how many stories of financial freedom begin, with a simple but well-thought-out property. After a person understands the power of income-generating real estate, the story moves on to another type of asset that Robert Kiyosaki considers essential: dividend-paying stocks. Here, the logic is similar, but the setting changes. Instead of a physical property, we enter the world of companies that work for you. Imagine becoming a partner in large companies without needing to open a store, hire employees, or deal with customers. By buying shares of solid companies, you become the owner of a small part of that business. When these companies make a profit, they share part of that money with their shareholders. That part is the dividend. It is like receiving a portion of the profit simply for being a partner. Kiyosaki likes this type of investment because it creates recurring income. It is not just about buying a stock, hoping it will go up in price. It is about buying an asset that pays you regularly, often monthly or quarterly. Over time, these payments begin to add up. At first, it may seem like little, but consistency makes all the difference. In the story of those who follow this strategy, something interesting happens. Instead of spending the dividends, the person reinvests that money by buying more shares. And more shares mean more dividends. It is a cycle that strengthens over time. The money starts small, but it grows like a snowball. This is one of the points Kiyosaki always highlights: letting assets multiply. Another important detail is security. Companies that pay dividends consistently are usually mature businesses with strong cash flow. They sell products or services that people continue to use even in difficult times. This brings more stability to those who invest with a long-term mindset. For those over 35 who start to look at the future more carefully, dividend stocks represent peace of mind. They do not require you to be present every day. They do not depend directly on your time, and they can be adjusted according to your financial reality. Just like real estate, they help build that feeling that money is working in your favor, while you focus on what really matters in your life. Before continuing to the next investment, let me make a quick and very important request. If this video is making sense to you, if at some point you saw yourself in these examples and felt that this content can help you change the way you think about money, like this video now, this shows the channel that this type of content is really worth continuing. Silver is one of the assets that Robert Kiyosaki has been highlighting frequently because it combines two important characteristics: protection and potential for appreciation. Unlike paper money, which can be created in large quantities by governments, silver is a limited resource. This means that over time, it tends to preserve value, especially in scenarios of inflation and economic instability. A fundamental point is understanding what silver is used for. It does not serve only as a store of value. Silver is widely used in industry, especially in technology, solar energy, medical equipment, electronics, and electric cars. As technology advances, the demand for silver grows. When demand increases and supply is limited, the price tends to rise. Kiyosaki often draws attention to the fact that silver is still undervalued when compared to other assets, such as gold. This makes it more accessible for those who are starting to invest. With smaller amounts, it is already possible to acquire physical silver or exposure to the metal, allowing a gradual and conscious start. Another important aspect is silver's role as financial protection. In times when currencies lose purchasing power, real metals tend to remain firm. Silver helps balance the portfolio, reducing dependence on the traditional financial system and offering an extra layer of security to wealth. From an educational point of view, investing in silver teaches something essential. Not every investment exists solely to generate immediate income. Some assets have the role of protecting, preserving, and preparing the investor for the long term. For Kiyosaki, silver fulfills exactly this function within a solid wealth-building strategy. Bitcoin is one of the investments that Robert Kiyosaki highlights most when talking about the future of money. He does not see Bitcoin merely as a new technology, but as a direct response to the problems of the traditional financial system, especially the constant loss of value of currencies issued by governments. In simple terms, Bitcoin is digital money with a limited supply. There will only ever be 21 million units. This is completely different from ordinary money, which can be created whenever governments and central banks decide to print more. This limitation is one of the main reasons why Kiyosaki considers Bitcoin a protection against inflation. Another important point is decentralization. Bitcoin does not depend on banks, governments, or intermediaries. Transactions happen directly from person to person, recorded in a public and transparent system. This brings more autonomy to investors and reduces dependence on institutions that can change rules, fees, or block access to money. Kiyosaki often emphasizes that Bitcoin should not be seen as a short-term investment. He recognizes that the price fluctuates a lot, but he sees these fluctuations as part of the asset's maturation process. For him, those who understand how Bitcoin works and think long-term tend to benefit more than those who try to predict quick market moves. In addition, Bitcoin functions as a modern store of value. Just as gold was used for centuries to protect wealth, Bitcoin emerges as a digital alternative for an increasingly connected world. It can be stored, transferred anywhere in the world, and cannot be inflated by political decisions. From an educational perspective, investing in Bitcoin is also investing in knowledge. Understanding how it works changes the way a person views money, financial control, and economic freedom. For this reason, Kiyosaki considers Bitcoin one of the pillars for those who want to protect themselves, position for the future, and build wealth in a new financial landscape. Gold is one of the oldest assets used to preserve wealth, and Robert Kiyosaki continues to recommend this investment because the fundamentals remain the same over time. Even before paper money existed, gold was already recognized as a store of value. It cannot be created out of nothing, does not depend on promises, and does not lose its relevance over the years. Kiyosaki often explains that gold functions as financial insurance. When the economy goes through periods of instability, high inflation, or loss of confidence in currencies, gold tends to maintain its value. While money can lose purchasing power, gold has historically remained a solid asset. Another important point is gold's role within a balanced strategy. It is not an investment designed to generate monthly income, like real estate or dividends. The role of gold is to protect wealth. It is like a silent vault that helps preserve what has already been achieved, especially in difficult times. Gold also offers simplicity. It can be acquired in different forms, such as bars, coins, or even through financial instruments. The most important thing, according to Kiyosaki's philosophy, is to understand that it represents real value, something that does not depend on political decisions or money printing. From an educational perspective, gold teaches an essential lesson. Wealth is not only about earning more, but also about not losing what has already been built. By including gold in a portfolio, the investor reduces risk and creates a more solid foundation to face economic changes. For this reason, Kiyosaki considers gold a fundamental pillar for those seeking security, balance, and a long-term vision. Creating or participating in your own business is one of the strongest points of Robert Kiyosaki's philosophy. He teaches that the real financial leap happens when a person stops trading time for money and starts building something that generates profit even without their constant presence. A well-structured business is an asset. It can be small at the beginning, such as a simple service, an online store, a digital product, or even a partnership in an existing business. What matters most is not the initial size, but the model. Kiyosaki always emphasizes that a good business must function as a system and not depend entirely on the owner to generate profit. By investing in their own business, a person learns skills that go beyond money. They learn about sales, leadership, decision-making, and strategic vision. These skills stay with the individual for life and increase their ability to generate income in any economic scenario. Another essential point is control. Unlike a job, where income has a defined limit, a business has no ceiling. It can grow, expand, reach new markets, and increase profits over time. This scalability is one of the main reasons Kiyosaki defends entrepreneurship as a path to financial freedom. Entrepreneurship does not mean abandoning everything at once. Many people start while still working, using part of their time and money to build something on the side. With discipline and continuous learning, this business can turn into a solid source of income, capable of supporting the desired lifestyle in the future. For Kiyosaki, investing in your own business is investing in independence, autonomy, and freedom. It is moving from the position of someone who only follows orders to the role of someone who builds assets that work in their favor. Financial education is the foundation of all the other investments that Robert Kiyosaki teaches. Without it, any strategy loses strength. He often says that it is not the lack of money that prevents people from becoming rich, but the lack of knowledge about how money really works. Investing in financial education means learning to differentiate assets from liabilities, understanding cash flow, taxes, debt, and how the financial system is structured. When a person learns this, they begin to make more conscious decisions. They stop acting on impulse and start acting with strategy. Kiyosaki always reinforces that traditional school teaches people to work for money, but rarely teaches money to work for you. That is why seeking books, courses, videos, and mentors becomes a direct investment in one's own financial growth. This knowledge cannot be lost, stolen, or devalued. Another important point is that financial education reduces costly mistakes. Many people lose money not because of a lack of opportunity, but because of a lack of preparation. When knowledge increases, risk decreases, and opportunities become clearer. Over time, financial education changes the way a person sees the world. They begin to understand why some people get rich, while others always live on the edge. This continuous learning creates confidence, clarity, and discipline, essential elements for building wealth in a consistent and sustainable way. Asset diversification is a central principle in the way Robert Kiyosaki views wealth building. He teaches that putting all your money into a single type of investment increases risk and leaves a person vulnerable to unexpected economic changes. Diversifying is about distributing capital intelligently, creating more security and more opportunities at the same time. In practice, diversifying means not depending on just one source. Instead of relying everything on a salary, or only on stocks, or only on real estate, a person begins to combine different asset classes. Metals like gold and silver protect against crises. Real estate and stocks generate income. Cryptocurrencies offer exposure to the future, and personal businesses create growth. Each asset fulfills a different role. Kiyosaki often explains that the economy works in cycles. While one market goes through difficulties, another may be growing. When you are diversified, you do not need to time the market perfectly. Even if one investment is down, another may be compensating, maintaining balance in the portfolio. Another important point is emotional control. Those who put everything into a single investment tend to act out of fear or anxiety when something goes wrong. Diversification reduces this pressure, allowing for more rational and strategic decisions. This is essential for those who think long-term. Diversifying is not about complicating things. It is about organizing. It is about understanding that solid wealth is not built with single bets, but with a well-thought-out structure where each asset has a clear role. For Kiyosaki, diversification does not eliminate risks, but it makes the path more stable and sustainable for those seeking financial freedom. The use of good debt is one of the most misunderstood concepts, but also one of the most important in Robert Kiyosaki's philosophy. He teaches that not all debt is bad. The problem is not owing money, but what that money is being used for. Bad debt is debt taken on to consume, a car that loses value, installment purchases with no return, expenses that only generate costs. Good debt, on the other hand, is used strategically to acquire assets that put money in your pocket. When applied correctly, it accelerates wealth building. A simple example is using financing to buy a property that generates rental income. If the rent covers the financing payment, pays the costs, and still leaves a little left over, that debt is working in your favor. Instead of taking money out of your pocket, the asset pays for itself over time. Kiyosaki teaches that wealthy people use the financial system intelligently. They understand interest, taxes, and cash flow. While many avoid any type of debt out of fear, those with financial education learn to use the bank's money as leverage to grow faster, always with planning and control. This concept requires responsibility. Good debt is not gambling or going into debt without calculation. It is analyzing numbers, understanding risks, and ensuring that the acquired asset has real potential to generate income. When that happens, time begins to work in the investor's favor. For Kiyosaki, mastering the use of good debt is a turning point. It is leaving the survival mindset and entering a strategic mindset. Those who learn to use debt intelligently stop chasing money and start building structures that generate wealth over time. Before any investment, before any strategy, there is a silent moment that almost no one notices, but that changes everything. The moment of decision. It is not when the money appears, nor when conditions become perfect. It is when a person decides they no longer want to live on the edge, repeating the same cycles year after year. Robert Kiyosaki always emphasizes that most people do not fail because of a lack of ability, but because of a lack of decision. They know they need to change, but they keep postponing it. They say they will start when they earn more, when there is money left over, when they have more time. And that later never comes. A true decision makes no noise. It happens inside. It is when you accept that no one is coming to save you financially. Not the government, not the company, not retirement. It is you. From that point on, the mind begins to open up to learn, observe, and act differently. This is the first real step of financial transformation. Without it, all knowledge becomes just information. With it, every small lesson begins to turn into consistent action. One of the biggest mistakes people make when they start seeking financial freedom is wanting results too quickly. Robert Kiyosaki teaches that lasting wealth is not born from haste, but from consistency. Small decisions repeated over time have more power than big actions taken only once. Many people give up because they look at their starting point and compare themselves to those who are already years ahead. This comparison discourages and paralyzes. What almost no one realizes is that every financially free person started exactly where you are now, without knowing everything, with doubts and insecurities. Consistency comes in when you decide to learn a little every day, save a little whenever possible, analyze opportunities calmly, and not abandon the plan at the first obstacles. It is not about always getting it right. It is about continuing even when the path seems slow. Over time, this discipline creates something powerful. Confidence. You begin to understand money better, make decisions with less fear, and see opportunities that previously went unnoticed. Haste looks for shortcuts. Consistency builds foundations. This is how change becomes inevitable, not by luck, but because you stayed firm when most gave up. Many people believe that getting rich is something reserved for those who were born with talent, luck, or the right connections. Robert Kiyosaki directly challenges this idea. He shows that the real difference between those who build wealth and those who do not lies much more in discipline than in any special gift. Financial discipline is doing what needs to be done even when no one is watching. It is studying when it would be easier to rest. It is saying no to immediate expenses that sabotage bigger goals. It is sticking to the plan even when the initial enthusiasm fades. The truth is that most people know what they should do, but few do it consistently. It is not a lack of intelligence, it is a lack of discipline. And the good news is that discipline can be learned, trained, and strengthened over time. When you create simple financial habits, such as tracking expenses, investing regularly, and seeking knowledge, these habits begin to work for you. They remove the weight of difficult decisions and make progress almost automatic. You do not need to be different from everyone else. You just need to be willing to do for long enough what most people abandon halfway through. That is how above-average results begin to appear. Fear is one of the biggest blocks in financial life. Fear of losing money, fear of making mistakes, fear of starting too late. Robert Kiyosaki teaches that the problem is not feeling fear, because that is natural. The real problem is letting fear decide for you. Every time you learn something new about money, investments, or business, that fear decreases a little. The unknown frightens. The known brings clarity. That is why financial education is not only about earning more, but about making decisions with greater confidence. Many people become paralyzed because they listen to negative opinions, stories of failure, or alarming news. Those who seek knowledge begin to separate facts from emotions. They learn to analyze risks, understand numbers, and see opportunities rationally. Over time, you realize that making mistakes is part of the process. Small mistakes teach more than long periods of inaction. What matters is making mistakes while learning, adjusting, and moving forward, rather than making mistakes by staying stuck. When knowledge grows, confidence follows. And when confidence increases, you stop running from opportunities and start evaluating them with maturity. That is the point where fear stops controlling your financial decisions. Most people wait for a big event to change their lives. A raise, an inheritance, a perfect opportunity. But the truth is that the financial future is built in silence, in small decisions that almost no one applauds. Robert Kiyosaki always teaches that those who truly change their lives do not announce plans, do not discuss dreams with everyone, and do not seek approval. They simply start, learn, adjust, continue. While many talk, few build. Each concept you have seen here was not meant to impress, but to awaken awareness. You do not need to apply everything at once. You just need to start with something and remain consistent. One well-taken step today is worth more than years of intention without action. If this video spoke to you, if at some moment you felt that this message was exactly what you needed to hear right now, like the video. This shows that you are committed to your own change. And if you truly believe that you can transform your financial life in the coming years, subscribe to the channel. Here we talk about money, mindset, and freedom in a clear, realistic way, without empty promises. The next step depends on you.